All right, let's dive into a world most of us probably don't think about too often. High-performance forged and machined rings.
The unsung heroes of engines and machines everywhere, you could say.
Exactly. And today we're zeroing in on Rolex Rings Ltd, looking specifically at their second quarter results for fiscal year 2025.
A company that's really carving out a niche for itself in this sector.
Absolutely. And we've got a pretty good stack of info to guide us through this deep dive. We've got the official press release announcing those Q2 results, the full-fledged financial report, all the numbers.
All the nitty-gritty?
Yeah. And to top it off, they've got a really sleek investor presentation too. So by the end of this, you'll not only know how Rolex rings performed, but you'll also start to understand how they're dealing with this kind of crazy global economic situation we're in.
And what it all means for industries way beyond just making rings. We're talking automotive, industrial, the whole picture.
Okay, let's kick things off with those headline figures. Rolex rings reported revenue from operations hitting $3,002.72 million for Q2 of fiscal year 2025. Their profit after tax landed at $492.62 million.
So right off the bat, something stands out. Revenue dipped a bit year on year, but profitability actually went up. That's not always the case.
Yeah, that's definitely a bit of a head scratcher. There's got to be a story behind those numbers. Let's break down their revenue a bit more. Right off the bat, nearly half, 38% of their revenue, comes from exports.
Global reach right there, not just playing in the local
Yeah,
market.
exactly. So they're competing on an international level. Now, their product breakdown, just bearing rings, those are their bread and butter, makes up 47% of their business. But they've got other components in the mix too.
Showing some diversification there, which is usually a good sign.
Right. And this is where things get interesting for me. When you look at their revenue by industry, you see a pretty significant shift in their portfolio. Passenger vehicles, that's still their biggest customer base, at 45% of revenue.
The core market, but it seems like things are evolving.
It is. That 45%, that's actually down from previous years. But on the flip side, industrial applications, those are on the rise, now accounting for 38.2% of the revenue.
That's a pretty hefty jump. Got to be some factors driving that.
Yeah, I think it's a couple things. The industrial sector itself is seeing a lot of growth right now,
Hmm.
especially in areas like automation and renewable energy.
All right.
And it looks like Rolex Rings is really tapping into that, offering components that go beyond just cars and trucks. They're branching out.
Smart move. Broadening their horizons and probably helping to buffer them against any slowdowns in specific markets.
Exactly, and it probably plays a role in why their profitability is up, even as revenue takes a little dip. And speaking of profitability, their EBITDA margin held strong at 24.4% in Q2.
EBITDA margin. Now, for those who aren't financial analysts, think of it like this. It's a measure of how efficiently a company turns revenue into profit. Basically, how much profit they make for every dollar of revenue after stripping out some costs like interest and taxes. And in this case, a margin like 24.4%, that's pretty healthy, especially given the current economic climate. Really shows they're keeping a tight rein on costs.
So it's not just about boosting profit by any means necessary. They're doing it the right way.
Yeah, they're running a tight ship, as they say.
Now, I want to get into some of the finer details from this financial report because there are some really interesting bits in here, like their operating expenses. Those seem to be well under control.
Yeah, those are actually down slightly year on year. And their debt levels, those look manageable too.
And it looks like they've been actively working on keeping that debt under control. I noticed there's something called an exceptional item in their FY24 statements, and it's all tied back to some debt restructuring they did back in 2013.
Yeah.
What exactly is debt restructuring anyway?
Think of it like renegotiating a loan. Back then, they basically reworked the terms of some existing loans to give themselves a little more breathing room with their cash flow, make their debt more manageable over the long haul. Of course, that kind of financial maneuvering usually comes with some upfront costs, which is what that exceptional item represents.
So they took a bit of a hit back then to set themselves up for a better future.
Precisely. And they've been chipping away at those obligations ever since. Shows a commitment to cleaning up past issues and building a stronger foundation.
So they're playing the long game, not just focused on the immediate bottom line.
Absolutely. And speaking of the future, their investor presentation, they've got some pretty ambitious growth plans laid out in there. This isn't just a company trying to hold steady, they're looking to expand.
Before we get to those growth plans, there's one more thing I wanted to point out from the financial report. Their cash flow statement shows they're generating positive cash flow from their core operations.
Now that's a fantastic sign. Means they're bringing in enough cash to keep the lights on and even fund those ambitious growth initiatives without having to rely heavily on borrowing. It gives them a lot of flexibility.
Okay, so what does that flexibility actually mean for them? What can they do with it?
Well, for starters, it means they can invest more in research and development, coming up with new products and technologies. Or they can expand their production capacity to meet that growing demand. Both are key for staying ahead of the competition.
So they're in a good spot financially, generating cash,
Yeah.
and they've got these big plans for the future. I think we've got a lot more to unpack here.
Oh, yeah, they've definitely got some exciting things on the horizon. One of their big plans is to expand into Southeast Asia, targeting countries like Vietnam and Indonesia. Makes a lot of sense when you think about it.
Yeah, follow the growth, right? But it's a crowded market out there. How are they planning to actually make a dent, win over customers in a whole new region?
Well, they're not going in blind. They're banking on their reputation. They've been around for a while now, over 2 decades, built up a solid track record of quality and reliability.
Brand recognition is huge, yeah. Especially when you're trying to gain trust in a new market.
It's not just about name recognition, though. They're also pushing their technological edge, showing they can customize solutions. In today's world, it's not enough to just offer a one-size-fits-all product.
Yeah, it's like you got to tailor that suit, get the perfect fit.
Exactly. And that personal touch extends to building relationships, too. They're going to industry events, meeting potential customers face to face, showing they're serious about these new markets.
Can't underestimate the power of that personal connection.
And they're not just trying to go it alone either. They're forming partnerships,
Hmm.
teaming up with local distributors and suppliers.
Leveraging existing networks, making those connections, that's smart.
It's a win-win. They get their foot in the door, their partners get to benefit from Rolex Rings' expertise.
Okay, so they've got their sights set on Southeast Asia, but what about the electric vehicle revolution that's happening? Seems like every company's jumping on that bandwagon these days. What makes Rolex Rings' approach different?
They're not just dipping a toe in, they're diving headfirst. They're investing heavily in R&D specifically for electric vehicle components. And they're not just making any components, they're focusing on areas where they have a real advantage, like lightweight and super durable gears, shafts, bearings, things that are essential for any vehicle, but even more important for electric vehicles where weight is a huge factor.
Yeah, every ounce counts when you're trying to squeeze more miles out of that battery.
Exactly. And this is where their expertise in forging and machining really shines. They can make these parts incredibly strong and precise, but also lighter than traditional methods. It's a game changer.
So they're taking their existing skills and applying them to this new high-growth market. Makes
Okay.
sense.
And they're not just aiming to be a supplier, they want to be a partner, working side by side with electric vehicle manufacturers to develop innovative solutions right from the start.
So they're getting in on the ground floor,
Mhm.
shaping the future of these vehicles. That's smart. But all this growth, all these plans, it requires a lot of resources. You mentioned their investor presentation, their ambitious plans. What else is in there?
Well, one of the big things is increasing their production capacity. They're planning to expand to be able to meet that growing demand.
Seems like a bold move in this economic climate with all the uncertainty.
It's a sign of confidence. They're betting on themselves, betting on the future. And they're not just building more factories, they're investing in new technologies, more efficient processes. It's about working smarter, not just harder.
Staying ahead of the curve. That's got to be
Right.
tough in such a competitive industry. Speaking of which, how are they doing compared to their competitors?
That's a good question. To really get a clear picture, we'd need to look at the financials of other companies in the same space. Compare things like revenue growth, profitability margins, debt levels.
It's all relative, right? Their performance only makes sense in the context of the bigger industry.
Precisely. But from what we've seen so far, they seem to be doing a lot of things right. They're diversifying, expanding, innovating, all good signs.
And they've got that strong cash flow, giving them the flexibility to ride out any bumps in the road.
Yeah, that financial stability is a real asset, especially in today's world.
Speaking of the market, we know their stock price dipped a bit after they released these Q2 results.
Yeah, but we've got to remember, the stock market can be a fickle beast. It often reacts to short-term news, even if the long-term outlook is solid. It can take time for the market to fully digest a company's plans and adjust its valuation accordingly.
So sometimes you got to look beyond those headlines, see the bigger picture. Patience is key.
Absolutely. Short-term fluctuations are normal. What matters is the company's fundamentals and their long-term strategy.
Now, there's another thing I keep thinking about, that overall economic mood. We've got inflation, rising interest rates, all this uncertainty in the air. How much does that impact investor decisions, even for a company like Rolex Rings that seems to be doing well?
Oh, it definitely plays a role. When the economy is shaky, investors tend to get a little more cautious. They might hold back on investments, even in companies with strong fundamentals, until things settle down.
So even if a company's doing everything right, those external factors can still cast a shadow.
It's a reminder that no company operates in a vacuum. The broader economic climate always has an impact.
Okay, I want to rewind a bit and go back to that debt restructuring they did in 2013. I'm still a little fuzzy on why they had to do that in the first place.
Well, think of it like this. Sometimes companies need to make adjustments to their finances to ensure they can continue to grow and thrive. And back then, Rolex rings needed to address their debt situation to improve their cash flow and make their debt more manageable. It wasn't an ideal situation, but it was a necessary step to take.
So they took a bit of a hit in the short term to secure their long-term stability.
Exactly. And the fact that they've been steadily working to reduce that debt ever since shows they're committed to responsible financial management. It's a good sign for investors.
It's like they're cleaning up their financial house, getting things in order. But there's one area we haven't really touched on yet, and it's a big one for investors these days. Sustainability. What are they doing to address environmental and social concerns?
That's a great question. To really understand their stance on sustainability, we'd need to dig a little deeper into their corporate reports, see what kind of initiatives they have in place.
What kind of things would we be looking for?
We'd want to know about their energy consumption, their waste management practices. Are they doing things to minimize their environmental footprint? We'd also want to see how they treat their employees, how they engage with the community. It's about being a good corporate citizen.
It's not just about profits anymore. It's about doing business the right way.
Right, and investors are paying more and more attention to these factors. They want to support companies that align with their values.
So it's something to keep an eye on for sure. Let's talk more about their global aspirations. They're looking at high-growth markets, specifically Southeast Asia. What makes that region so attractive?
Well, these countries have booming economies, growing populations, a rising middle class. All that translates into more demand for the kinds of products Rolex rings makes.
More people, more cars, more need for parts. Seems pretty straightforward.
It is, and there's another strategic advantage. Many of these countries have less developed manufacturing sectors, which creates an opportunity for a company like Rolex Rings to come in with their expertise and establish a strong presence.
So they can be a leader, a pioneer in these new markets. That's exciting.
It's a smart move, capitalizing on the growth potential while leveraging their existing strengths.
Okay, one last thing I want to dive into. Their investments in R&D, specifically in electric vehicles.
Yeah.
It's a risky move, right? Putting resources into something that's still evolving.
There's always risk involved with R&D, but they're being strategic about it. They're focusing on areas where they already have expertise, things like lightweighting and high durability components. These are essential for electric vehicles and play to their strengths.
So they're not just throwing money at a trendy new market, they're aligning their existing capabilities with a future need.
Exactly. And by working closely with electric vehicle manufacturers, they can stay ahead of the curve, adapt to changing demands. It's a calculated risk, but a potentially very rewarding one.
Now, there's one piece of the financial puzzle we haven't talked about yet. Dividends. For those who don't follow this stuff closely, can you explain what dividends are and why they matter to investors?
Sure, dividends are payments that companies make to their shareholders. It's basically a way for investors to share in the company's profits.
Though even if the stock price doesn't go up, investors can still get a return on their investment through dividends.
That's right. And a company's dividend policy can be a signal to investors. A consistent dividend payout can indicate financial health and stability.
Okay, so what about Rolex rings? Are they paying out dividends?
To get the specifics on their dividend policy, we'd need to look at their investor relations materials or their financial statements, but it's definitely something for potential investors to research.
Always more to learn. Well, I think we've covered a lot of ground today.
We have. From their financials to their growth strategies, we've taken a pretty thorough look at Rolex rings.
And hopefully you, our listeners, have a much better understanding of this company, their performance, their plans, and where they fit into the bigger picture.
It's a company that's evolving, adapting to a changing world, and it'll be interesting to see where they go from here.
All right, we spent quite a bit of time analyzing Rolex Rings' financials, their strategic moves, and how they're navigating this rapidly changing landscape. But before we wrap up, I want to touch on something we haven't explicitly discussed yet. The management team.
Ah, yes, the people at the helm. They're a crucial part of any company's success.
Absolutely. They set the direction, make the big decisions, steer the ship. So What do we know about the leadership at Rolex Rings?
To really get a handle on their expertise and experience, we'd need to dig a little deeper. Look into their backgrounds, see what they've accomplished in the past.
What kind of information would be helpful to know?
Well, understanding their vision for the company would be key. How do they plan to achieve those ambitious growth goals? What's their approach to communication and transparency with investors? All important factors.
It's not just about their technical skills, it's about their leadership qualities, their ability to inspire and guide the company forward.
Exactly. And those qualities can be just as important as the numbers on a balance sheet.
All right, I think it's time to bring this part of our deep dive to a close. We've covered a lot of ground today.
We have, and hopefully given you, our listener, a lot to think about.
We've seen that Rolex Rings is more than just a company that makes rings. They're a company that's embracing change, adapting to new markets, and really positioning themselves for the future.
And their recent performance, along with their strategic plans, gives us a glimpse of their potential.
Before we sign off completely, we'd like to leave you with a thought, something to ponder. Given their focus on innovation, their move into these high-growth markets, their commitment to the electric vehicle space, could Rolex Rings become a major player, a real force in the global automotive market in the years to come?
It's an interesting question. And as you continue to learn about this company, we encourage you to consider that question.
And that's it for this deep dive. Until next time, keep learning, keep exploring, and keep asking those tough questions. Okay, we've been a good chunk of time dissecting Rolex Rings' financials, their strategies for growth, even touch on their sustainability efforts. But before we wrap up, I kind of want to circle back to their expansion into Southeast Asia, something you mentioned earlier. You made a pretty compelling case for why that region makes strategic sense, but I'm curious about the how. It's one thing to spot a promising market, but another to actually, succeed there. What are they doing to make sure they can really penetrate those markets?
You're right. It's not just about showing up. They're taking a pretty multifaceted approach, combining, what they're already good at with building those new relationships and adapting to the local scene.
Break it down for me. What are some of the key pieces of their market penetration strategy?
Well, first off, they're smart to leverage their reputation. Over 2 decades in the business, built a solid track record, delivering high-performance components. That matters in any industry, but especially in manufacturing, where, precision and durability are everything.
So they're not coming in as the new kid on the block. They've got that credibility.
Exactly, but they're not just coasting on past successes. They're showcasing their tech capabilities, their ability to customize solutions to meet specific needs.
Yeah, in today's world, you can't just offer a one-size-fits-all product.
Nope. Got to be flexible, got to be adaptable. And they're also forging those strategic partnerships, teaming up with local distributors, suppliers, even potential competitors in some cases.
Ah, the power of collaboration. Why reinvent the wheel when you can work with people who already know the terrain?
It's a win-win. They get access to those new customers and distribution channels, and their partners, they benefit from Rolex Rings' expertise and technology.
Makes sense. And let's not forget about the human element. Building those relationships, the trust.
Absolutely. They're out there engaging with potential customers, going to industry events, showing they're committed to those markets for the long haul. It's about more than just signing contracts. It's about building real connections.
Okay, let's shift gears a bit and talk about their focus on electric vehicles, something that's been woven throughout our discussion. They see this as a big growth area, but how does their expertise in forging and machining translate to this electric mobility world? Are they just making the same old parts for a new type of vehicle, or is there something more, innovative happening?
They're definitely leveraging their existing expertise, but they're also pushing the boundaries. They're not just creating EV components, they're optimizing them for the unique demands of electric vehicles.
Give me some specifics. What kind of components are they developing? What makes them stand out?
Think lightweight, super durable gears, shafts, bearings. Essential in any vehicle, but even more so in electric vehicles, where weight reduction is key for maximizing range. Every ounce matters when you're talking about battery life.
So it's not just about making the same parts, it's about making them lighter, more efficient.
Right. And Rolex Rings' deep expertise in high-precision manufacturing, that's what allows them to do this. It's a game changer.
So they're not just chasing the EV trend, they're bringing real value to the table.
Absolutely. And they're not content with just being a parts supplier either. They want to be a partner, working closely with EV manufacturers from the get-go.
So they're shaping the design process, making sure their components are perfectly integrated and optimized. Smart move.
It's a collaborative approach that benefits everyone involved.
It's interesting. They're taking the same collaborative approach with their expansion into Southeast Asia, partnering with local players. And with their R&D, working hand in hand with EV manufacturers. It's like they understand that success in today's world requires more than just going it alone.
You got it. It's about building those ecosystems, not just empires.
Well said. I think we've covered a lot of ground today. We've gone deep into their financials, their growth strategies, and even got a sense of how they're approaching sustainability and innovation.
We've certainly explored a lot. Rolex Rings is a company that's evolving, adapting to a changing world.
And their recent performance, along with those ambitious plans for the future, paints a pretty compelling picture of their potential.
Definitely a company to keep an eye on.
Before we sign off, we'd like to leave you with one final thought. Given their commitment to innovation, their expansion into those high-growth markets, their focus on electric vehicles, could Rolex rings become a dominant force in the global automotive components market in the coming years?
That's a question worth pondering. As you continue to explore and learn about Rolex rings, consider their journey, their strategies, and their vision for the future.
And on that note, we'll wrap up this episode of The Deep Dive. Thanks for joining us.
Until next time, keep learning, keep exploring, and keep diving deep.